If I'm talking negatively about a stock, it's usually because I think it's overvalued. And when the stock was trading for over $30 a share, unfortunately, I thought it was overvalued and my video didn't get a lot of views. And I think a lot of people are in a bad position with the company. I think a lot of people probably bought in $15 to $30 range, is now looking at a $4 stock and wondering what the heck to do. And so I created this channel to help people like that. So I recently did a video on NIO, and man, did I get hammered on this one.
Don't stand toe-to-toe with him!
And I'm a little bit confused because this is a stock that I did an analysis 3 years ago, and I haven't done an update on it since because I'm waiting for the new quarterly report to come out so we can get an understanding about battery swapping and how profitable that could possibly be. Without that information, it's really hard to figure out the trajectory of NIO stock, but I want to break down a few different things here. And if you're new to the channel, welcome in. My name's Colton. We do fundamental analysis on this channel. So a few years ago, NIO was trading for a little over $30 a share, and I did an analysis on the company prior to all the new technology that's come out, prior to the battery swapping really taking off here, and I got right around a $3 to $5 price target on NIO. Currently, the stock is in pennyland territory, currently trading for under $5 a share. Any stock that's trading for under $5 a share becomes what we call a penny stock. Now, when I do these types of analysis, there is a risk versus reward we have to really look at. Fundamental analysis can be very subjective sometimes. It's a story that I'm personally telling, and it's a story that I believe that the company can execute. So I want to talk through unbiasedly the pros and the cons of NIO. Do I think it's a buy at these levels? I think under $5 a share, the risk versus reward is absolutely there. It's what my analysis told me a few years ago, and looking forward with all the things that they're currently doing and the cash position, it does make a lot of sense that you would be taking on the risk of NIO here. But there is a lot of headwinds with this company. You have political tension, unknown tariffs down the pipe. This is a company that's burning a tremendous amount of capital. When we go to the recent quarterly report here, I want to point out their cash and cash equivalent positions here. Short-term investments are over $2 billion US dollars, restricted cash is at $780 million, and then they have cash and cash equivalents sitting at $4.6 billion. When we factor that in with roughly $2.5 billion of liabilities, if we take that $8.5 billion of liquidity, we minus out that $2.5 liquidity, we get $6 billion of liquidity, cash that the company has. We divide that by the 1.75 million shares outstanding, we get about $3.42 of just liquidity that's sitting on the balance sheet per share. Now, the thing I want to point out here is the amount of dilution taking place. This is definitely going to be a concern when the company is burning roughly $3 billion a year in USD, which means that that cash pile is definitely going to be a problem, and they're either going to have to do one or two things. They're either going to have to dilute shareholders, or they're going to have to raise capital in a higher interest rate market, which is going to then impact their negative earnings to be even more negative because they don't have any sort of positive operating income at this point in time. The other thing I want to point out here is the margins are coming down. They were doing 13.7% margins in 2022, and they're now doing 9.5% margins in 2023. So I have a couple issues here with my analysis. The first issue is I thought that they would be growing closer to 25%. They're growing right around 20%. That's not a huge deal, but when your margins are coming down 420 basis points and you're also diluting at a pretty high rate, that takes away from that growth rate as well. When we bring it down to a gross profit margin, they went from 10.4, now gross margin sitting at 5.5%. In 2023, NIO had 2.1% market share of China's new energy EV vehicles, which is ranked 9th in the country. When we compare that to BYD that has 29.2% market share in China, you definitely have a big opportunity here with NIO as they do have a very small market share and it is growing. But once again, when I think about the competition and I see the margins coming down, that's telling me a story that the competition is actually impacting margins. And we saw that with Tesla. That's why Tesla's went from a $400 stock down to nearly a $180 stock. So I think the liquidity profile of NIO is fine for the next year or two, but the problem becomes the amount of capital that they're burning. They're burning over $2 billion and they're sitting on net liquidity of right around $6 billion, which gives them about 3 years to kind of figure some things out here. The battery swapping is still kind of the unknown wild card here. That definitely could be something that leads to better margins, opportunity growth, and things of that nature, but really, really hard to tell right now because when I look at their quarterly report, I see revenue coming in from vehicle sales, and I also see additional revenue coming in, making up right around 10%. And once that bottom line becomes a little bit clearer, I can actually get a more detailed analysis on the company. But what I wanted to point out was an analysis that I did a few years ago did come to fruition now. And so sometimes fundamentals take times to play out, both from the upside and the downside. That was essentially the point of the video, and understanding the risk that you're taking on with this company. Yes, they're very innovative. Yes, it's very exciting, but they also have a lot of headwinds ahead of themselves. Their burn rate is extremely high. They're diluting. They have tariffs to worry about. So for them to be priced under $5, I think makes a lot of sense. And I think this is where the risk versus reward makes a lot of sense as well. If I'm talking negatively about a stock, it's usually because I think it's overvalued. And when the stock was trading for over $30 a share, unfortunately, I thought it was overvalued and my video didn't get a lot of views. And I think a lot of people are in a bad position with the company. I think a lot of people probably bought in $15 to $30 range, is now looking at a $4 stock and wondering what the heck to do. And so I created this channel to help people like that. Have a process, understand that your analysis are probably going to be a little bit subjective, but you have to be as objective as possible. As always, appreciate your time. We will see you in the next one.